There's room to grow in every profession. Insurance is no exception. Welcome to the Ensurity Group. Learn how to become a better and more productive insurance agent. If you're an insurance agent, you've found your community. The Ensurity Group, specializing in life, health, and accidental products. Our mission is do good, be good, make good, always. And our motto is learn, grow, have fun, and make money. This is the Ensurity Group.
The mortgage protection lead. So there's a few different types of leads that we use. It comes down to the types of leads that we use. So let's talk about the mortgage protection lead. What is mortgage protection? Well, they call the life insurance mortgage protection for a couple of reasons. Mortgage protection is, and like it says, no, mortgage protection, it is basically life insurance. People go and buy a new house. If something happens to them in the event of death, disability, unemployment, critical or chronic illness, well, they want to have some type of protection so the house, it's paid for in the event of one of those life events, right? In the event of death, they can take care of the mortgage, the money part, not the house. If the house burns, no protection. That's home insurance because that's for the home, right? But mortgage protects the money. Who pays for that money after the customer dies, it's disabled, unemployed, or chronically ill or terminally ill? Okay, so that's mortgage protection. So we go ahead and produce a lead. Basically, we could do it online, or we could do the actual mailer to the people's home where they sign and return to us. So to what we're doing, one of them is you always gotta look up, obviously you're gonna get the customer's name, you're gonna have the correct address, you're gonna have the county. The county is important because it is not important for the mortgage, but I include that there because as the customer turns older, let's say turning 65, you can go ahead and offer them other products such as Medicare supplements, Medicare Advantage, and then we need the county. Now you got the customer's name, you got the correct address, you got the county, and you also have the bank. This is the initial bank that gave the people the money to buy the house. It's not always the case when you're calling 3 months later. After 3 months, usually the bank take all their loans and sell them to a bigger bank. So a lot of times it goes from the First National to Chase, Citibank, or another bank. And then you have how much did they borrow? How much did they borrow? So you have all the information that you need here to start with. The only thing you don't have is this a new home? So is this a new home purchase? Is this a refinance? What they call a refi? Is this a reverse mortgage? What type of, or is this a home improvement? Or is this a HELOC, home equity line of credit? They call it HELOC. As you look at the mortgage protection, it doesn't have to be a new home per se. It could be a refinance, somebody that bought the house for 100,000 10 years ago. Now they only owe 50,000 and they want to refinance that mortgage to lower their payments. Is it a reverse mortgage? What happens on a reverse mortgage is the customer is older, 70 years old, the house is paid for, and now they did a reverse mortgage, which basically they don't pay the bank pays them monthly some money for retirement, which means that the customer's got some money and their house was already paid for a long time ago, and now they just did a reverse mortgage to have more money for retirement. Or is it a home improvement? They want to do a pool, a fence, fix the roof, have a new kitchen, and they do a home improvement loan Or is it a HELOC? It's a home equity, like a credit card, but for a house, they call it HELOC. So it could be five different types of, those are the most popular, not just those five, but those are the most popular types of loans that will generate a mortgage protection letter. And usually the customer goes in, and then the customer will then gives us their date of birth, either for the borrower and the spouse, or just one or both. You'll have the phone numbers, and in this case, you would have the email. It is important that you're looking at this when you're talking to the customer. I usually, now with the experience, I look at the lead very fast. I don't need to examine every lead because I've done it so many times. And a lot of times, I don't want to spend a lot of times looking at the lead and then call the number and there's no answer. I usually call the customer, and as I'm calling the customer, then I'm looking at the lead and trying to put some stuff together. So it just goes pretty fast. It goes faster. The other thing that when I initially call the customer, I usually give them on my script, at least on my script, I use I'm gonna pull my script. Let me do it over here. And in this case, let's say it's Courtney Kennedy. So I would say ring, hello, Courtney. Yes, this is Mo Flores with the Ensurity Group, and I'm returning your call on a lead that you mailed back to us, right? About your mortgage protection with, who's the bank? One reverse about the mortgage protection with one reverse mortgage for $80,000. Remember that? So you want to go ahead and paint a picture in the customer's mind so they remember what's happening. And I'm going to go again. Hey, Courtney. Hello, is this Courtney? Yes, this is Mo with Ensurity Group, your mortgage protection company. Or we're calling you, we're returning your call on a letter that you mailed back to us. So I'm painting that picture, guys. I'm returning. I'm not making a call. I'm returning a call from her request in mail. So, and I'm gonna say it's about your mortgage protection with one reverse mortgage for $80,000. Remember that. Uh, no or yes, or that was last year. That was a long time ago. I go, perfect. It should have been pink or green letter. Oh, yeah, yeah, yeah. Okay. So if you remember the pink, that was the first time we sent you a letter. And then the green, we sent like 1 month later. So we usually get two letters from us. Okay, perfect. Yeah, I remember you. Okay. So the reason of my call, Courtney, is that I have a two or three quotes together for you that would take care of your mortgage in the event of, and I never start with this one, with death. I go in the event of unemployment, number one, because this is the number one reason people cannot pay their house because they are out of work. So unemployment is number one, and then I move. In the event of unemployment, disability, critical illness, or worst case scenario, untimely death. Courtney, I got a quote for you. If you're ready, I can go ahead and email those to you, or if you have a pen and paper, I can give you those right now. Perfect. All right. So that's the first part of the script. The second part, obviously, is gonna be, well, I already got it. I already got it. I decided not to. There's gonna be the actual rebuttal. And this is why we came up with our 20-20-20. Each one of this, the 20-20-20 system really gives you the opportunity as a phone caller to build trust. So basically, on the first 20 minutes, you gotta build trust. On the second 20 minutes, you gotta present. In the last 20 minutes, you gotta close, but you gotta be able to almost tell the customer, so which one of these three would you which one of these three quotes will meet your needs and fit your budget better? Which one of these three quotes will meet your needs and fit your budget better? Okay, and build trust on the first 20. So as I call, it's going to take about a minute for Courtney to know who you are. So you're going to say, uh, ring, hello, Courtney. Yes, this is Mike with Ensurity Group, your mortgage protection company. And I'm calling you and returning a call in a letter that you mailed back to us about your mortgage protection for $80,000. Oh, yeah, no, thank you very much. I already got it. Perfect. That's great that you already got it. Hear me out. This is it. This is key. It's perfect that you already got it. Every smart person like you, the best thing that they can do is get the product, because all of us will die. Don't you agree? Yeah, perfect. Okay. So Ben Kearney, would it make financial sense? This is, if you get that rebuttal, I already got it. If you get that rebuttal, then you go, all right, perfect. That's perfect that you got it, because every smart person should get it, because all of us will die in the future. You agree? Perfect. That's great. So let me ask you something, Courtney. Will it make financial sense for you to get the same? The same, instead of writing same, I'm gonna go equal. Will it make sense for you to get the same product or greater benefit or lower the price? Does it make sense to do financial sense to do that? If we could do that for you, or no, right? If they tell you no, they're going to sound pretty dumb. If they tell you yes, you got them one more opportunity, right? Closer. If we can get you the same or greater than, lower the price, would that make financial sense for you? Yes, of course. It always does. Yeah. Well, let me tell you what we can do. Here's what's, and then this is the phrase that you want to use all the time, all the time. All right. So Bernie, great. Great is obviously one of them. Perfect is another one. But one of the most powerful notes is here's what's going to happen next. So here's what's going to happen next. I'm going to put some quotes together, three quotes together. I want to make sure I check with my manager and then call you back. Or if you got time right now, I can run the quotes right now. So remember that you're calling a customer, and that customer might be doing something the minute that you call them, because now we got busy lives. So you're going to go and say, here's what's going to happen next. I need to put three quotes together. He said, okay, if we do them right now, I can quote you right now, but I can also call you in 15 minutes. Is that okay? Or 20 minutes? Or after work? Or tomorrow morning? Or, so you're going past the 20-minute mark, but you want to somehow cut the conversation at one point. Cut it. And then if you can go in on a second call and present the quote and present the benefits, which we haven't talked about product benefits, but if we can do that, then now you're closer to the second 20. So statistically speaking, it says that if you go past the first 20, and let's say that you stay 10 minutes, well, that's great. That's awesome. Let's say that you stay 5 minutes. That's good. That's awesome. But then if you can move to the next 20, and the next 20, you go and take your time. And let's say that you put in 15 minutes here instead of 20, but you made a cut, you made a separation, and the customer again answer your call or your text or your WhatsApp or your email. So you're making whenever you reach this stage, you're 70% closer to a sale. Over here, people try to close the sale right here. Well, this part has about a 3% chance of close. So would you like to have a 3% or a 70% chance? The answer is obvious. That tells you do not try to close on the first call. Start moving to the next one. And she says, okay, call me tomorrow, call me after work, call me next week, call me in the future. Call me in 10 minutes for sure. Call me in 1 hour. Perfect. Now you got a chance for the second 20, which then you're going to do a great presentation. And then you're going to take away and come back. And you're going to say, well, perfect. So which one of this do you think it's better for you, meets your needs, and fits your budget better? Perfect. We're going to do a couple of things for you, Miss Courtney. Since you picked a $50 product, let's say you picked a $50 product, I want to make sure that I talk to my manager and that I put the right pricing, the right discounts, and that I did everything correct so that I can then set everything up, call you back, and we can handle everything over the phone, or we can send you the information via email for your review. Or if we do this over the phone, here's what's going to happen next. So here's what happens next. On the last stage, I send this to my manager for approval, make sure that I did everything correct. And what happens next, Courtney, is that we have to make a decision if we do it over the phone or if we can send you an email, or if you want a real US mail, then we make that decision. So once we get to that point, here's what's going to happen next. You're going to need to have a valid checking account, because the only way you can process your mortgage protection, the only way, there's no other way, it's the only way you can process this mortgage protection is by having a valid checking account. Do you have a valid checking account? Yes. Okay, so here's what happens next. We really don't take any money out unless we have 100% approval. No approval, no payment. Basically, Courtney, here's what happens. You still gotta put in your banking account information, whether you do it on email, over the phone, or US mail. It doesn't matter which, you gotta do it. Once we do that, we submit your application for approval. Because remember, and again, this is key, there's no approval, there's no money out. But what happens next is that money, Courtney, the only reason we don't take money out unless you get approved, because money really does not buy the insurance. Part of it, what helps, because you got to make payment. But really, what buys the insurance is your good health and age. This is what really buys your insurance: good health and age. And it seems to me that the older we get, the worse off we get, and the older that we get. So, and then money comes at the end, right? Because money really doesn't buy the insurance. So you're taking the time to explain this to a customer. You went past the first 20, the second 20, and the third 20. Over here, the odds of you moving to this part, your odds are 85% closing. So you want to get through this process, I'm going to say as fast as possible, but this process could be done during the day, in 1 day, in 1 week, in 1 month, in 1 year. It doesn't matter how you break the 20-20-20. I'm just saying that you have a better chance of closing if you go through the 20-20-20 process. And basically, it's 1 hour spent on that phone with the client. And that really for the bonuses, because if you take a 20 case, it's going to stay on the book. They're not going to cancel as often as people that are not on the 2020. 20, it's key. 20-minute trust, build trust. 20, the second 20, present. Trust, present, close. In every step of the way, in between here, you gotta have, here's what's gonna happen next. Here's what's gonna happen next. Here's what's gonna happen next. You gotta have at least 7, here is what's going to happen next. Because you gotta have a vision, and the customer has gotta have that clear picture as to what the process is so that they feel more comfortable coming. For example, and this every salesperson has this. Every salesperson, old persons, young salespersons, new, good, bad, all of us make the same mistake. And the mistake is we go through the sales presentation, and even though we did 20, we forgot to do the here's what's going to happen next. And you go and you go and you go and you talk to Kearney, and she says, yeah, give me the quotes. And then you go, okay, here's the quotes, da, da, da. And then you went through the presentation, and she says, yes, I have a yes, I want it, include my husband, do this, only to find out a surprise. And this is where we get into problems, because we go, you did everything perfect, you did perfect trust building, perfect presentation, perfect close, and then you get a surprise, and the customer tells you something like this: surprise, I don't have a checking account. Surprise, I have cancer. Surprise, I don't have a job. Surprise, I don't have a checking account, or whatever. Or, so you get that surprise because you forgot to say, here's what's going to happen next. You need a checking account. Well, right there is like, oh, we don't have one. Okay, you need one. Next. Call me when you get one. Okay, perfect. And that's the only way. Perfect. Next, thank you very much. We'll talk to you later, right? Or you forgot to say, here's what's going to happen next. We need good health and age. Money doesn't buy it. Oh, really? Good health? Well, I had cancer 1 year ago, but it's gone, but I had it a year ago. Oh, so here's what's going to happen next. Let me go back to my manager. So because you forgot to say, here's what's going to happen next, and you didn't let the customer answer and see that picture, you got a surprise. Do not open up yourself for surprises with your customer. Always do, here's what's going to happen next. The next thing that you got to do, the most powerful statement right now, nowadays, is how so. So one of the powerful statements is, here's what's happened next. Here's what's going to happen next. If you got a business plan, here's what's going to happen next. And if you're going to make a call in your mind, you're already figuring this out. You just don't think about it. So you're making a call and you're already thinking what's going to happen next. What if the customer answers? You already know. What if the customer tells me something? You already know. What product am I going to present? You already know. And you're not thinking about it because your mind already processed, here's what's going to happen next. So please give that opportunity to your potential buyer. Give them the respect of 20, 1 hour, and then be strong whenever you're working rebuttals and defending, because we really don't want to defend. If you do the here's what's going to happen next and you paint that perfect picture, you don't need to defend. Example, well, I already got another product and it's cheaper, better, longer, whatever that benefit would be. Let's say, well, no, I already got it last year, thank you. And it's already better, I'm good. Well, financially, will it make sense to have equal the same? Will it make sense for you to have equal the benefits, greater, equal the price and benefits, or equal the price, greater the benefits, or lower, even lower the price? But if you use equal, greater, and lower, that's going to be key. So you got to have in front of you on a big sticky note, equal, greater, lower. And then, okay, I do understand that you have a product that you say that's better than ours, right? Yeah. How so? Push that defend to them. How is the product better than ours? Because they don't know ours, they don't even know theirs, and they say, well, because it goes for 30 years and you're presenting me a 15-year. Oh, really? Oh, well, no, I'm presenting you 15 years because not only will it save you money, but we have a guaranteed product to age 95. So I don't want to overcharge you up front like most every other agent, and that's why we're offering the 15-year. Well, now the product is cheaper, less expensive. How so? Well, because $80 and yours is $100. I understand that we have $20 more, but are you really talking about price or cost? Because we can make this 100, we can make it $80 or lower on price. That's price. Talking about money, talking about dollars, right? That's price. But the cost is, do you have a company that will pay your claim if something happens to you? That is the cost of opportunities lost. For example, you might have a product at 80, but have no unemployment benefit. We have that included with our product. We have confined care with our products included on there. And we can probably lower the price and still include lower unemployment or confined care. You're in Texas, we're a Texan company. The company that you're talking about, Mr. Customer, might be owned by somebody in Africa. So we're doing the right thing. So if you paint the great picture, you don't need to know a lot of rebuttals. You need to know how to use the power of your words. And the power of your words would be, as I said, equal, greater than, lower. Here's what's going to happen next and how so. You only need to know those few parts to be an excellent caller. Because every time you ask how, you got to open up. You open up for that open-ended question, which is gaining you. Hear me out. If you ask how, the other person needs to respond. And if you ask how again, what is it doing? Every time they're spending 1 minute responding to you, guess what's happening to your timer, to your 20-20-20? You're getting closer and closer and closer and closer. Because it doesn't matter. It doesn't matter if you hear or listen to the customer for 20 minutes saying you have a bad product, you have a bad price, you have a bad attitude, you have a bad connection, you have bad leads, you have, and you let them talk for 20 minutes on how bad you are, and then you go to the next 20, the last 20, and you're going to go for the kill, the close. You're ready to go, and you're going to ask the customer, after he's been there for 20 minutes telling you, you're bad, your company's bad, your boss is bad, your everything is bad, and then you move, and then you go, how so? And then they're going to have to go on another round and keep defending until you go, well, yeah, but I clearly see your point of view, but here's what's going to happen next. We can put together your product. Let's do this. Do you have a Zoom? Yeah, perfect. Let's do Zoom, or let me send you a brochure, and I'm going to write down everything you said you think why we're bad. And then I'm going to write on the other side, I'm going to write why we think that we're good, because we got unemployment, confined care, guaranteed to age 95. We're a Texan company for Texans. We pay $100 million a year in claims. This is true story, okay? This is true facts. I'm not making stuff up. This is what the company pays. We pay more in claims than bigger companies sell in a year. So we pay more in claims than, and then we have a service that's 24/7, 365, and you can reach us by text, and you can reach us by WhatsApp, email, phone, Facebook. And by the way, you can reach us Sunday afternoon during church. You can call us. Somebody will pick up. Try us. Christmas, you can call us. Try us. And not only that, but then we're going to have other verticals that we can save you money on. For example, you're going to get 20% off on your auto and home insurance. That will lower your bill, which makes if you're paying $100 to us, but we're saving you $50 a month on auto and home, that really means that we save you $50. That means that you're only paying a true $50 for your policy because we're able to save you. And then we have other stuff, and wow, benefits, 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 benefits. So here's what's going to happen next. You don't need a lot of rebuttals. You need to know when to use the power of how so, and the power of here's what's going to happen next. The third part, you gotta go for no. Go for no. Generate questions that the customer has to answer no. Because all of us have been trained to say, well, make the customer say yes, and then yes, 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 you're gonna get a yes. No, go for no. Go for no. Here's the example. How will it affect you paid less if you had a better product, if you got more coverage? How will it affect you or your family? So hear me out, everyone on this video. Go for no. And you ask the customer, Mr. Customer, how would it affect you if you paid less for your insurance? Well, no, it's not gonna affect me if I pay less. That means that you got them. You got them. They're asking you, give me something less expensive, I'll get it. How will it affect you if you had a better product? Well, no, it never affects to have a better product. You got them. Move forward. Then you go for no, and then learn when to use the power of, then here's what's going to happen next. Well, how will it affect you if you pay less? No, it wouldn't affect me. Here's what's going to happen next. We're going to go ahead and set up a phone call. We're going to do it over the phone, and we're going to need your account number and your routing number because that's the only way. And here's what's going to happen next. Are you ready? Because at that point, you're not getting to the point that you're saying, okay, now I need your checking account. And they go, wait a minute, I wasn't ready for that. You already got them ready for that because you already said, here's what's going to happen next 35 times. Let's say, well, how would it affect you if you got more coverage for the same price or lower the price? How would it affect you to get more coverage or lower the price? Not equal, but greater coverage, lower the price. Well, no, it wouldn't affect me. It'd be great. Here's what's going to happen next. And then you move to the third 20. Very, very important. So you don't need a lot of rebuttals. You don't need a lot of product. You don't need a lot of anything. If you can paint a great picture as to what you're doing with your customer. Perfect. Here's what's going to happen next. And this is for everybody on the call. We got script. We got 18 pages of scripts. We got short scripts, big scripts, fat scripts, easy scripts, hard scripts, aggressive scripts, all kinds of scripts. But listen, none of the scripts matter if you don't know how to use the power of here's what's going to happen next. How so equal greater or lower, go for no. Nothing's gonna matter if you cannot solve. Here's what's gonna happen next. How so equal, greater, or lower than, right? And go for no. Go for no. So if you don't know how to do that, you're gonna have a hard time selling. Doesn't matter what you sell. Hell, it doesn't matter if you're giving it away. It doesn't matter if you're calling and say, I got a free life insurance for you. Well, no. Well, no, trust me, it's free. 100% free. But we do need your social security, date of birth, and checking account. Even though it's free, we need it to process the policy. No money taken out, but it's 100% free. So you need my social, my date of birth, my doctor's information, and my checking account, but it's free. Oh, I don't trust you. So as if you don't know how to use the power of 2020, here's what's going to happen next. Here's what's going to happen next. How so equal greater than or lower, and then go for no, you're going to have a harder time. It doesn't mean that you will not be able to sell something to somebody, but you're going to hit it 3% of the time instead of 85% of the time. So the choice is yours as to how you want to make the call, but I just gave you the secrets for the next 5 years, because everyone that's good is going to move to this. This is the secret. This is the secret right now. Is no more to be good on rebuttals, accidental life. In accidental life, you see where it says over here, American Amicable Group of Companies. Whenever you say accidental, people think that you're offering accident. And we're not, it is accidental, but they sound similar on the phone. So if you can use, we're calling you with American Amicable. American Amicable. So American Amicable or accidental, same company. Now we go to the portal over here, and you're going to have access to the portal. You're going to have access to this same portal. Okay. And you can run illustrations. You can download the illustration to your computer or laptop or tablet, or you can do them here. You could go to mobile business tools, and somebody in our team will go through the orientation right here where you could do phone quotes or mobile applications, or you could do the illustration right online. Okay. And then you can download on order supplies. You're going to be able to download product that we're talking about right now. You can download the product that we're talking about, the brochures and things. So for example, one of the things that you do need to download and have on the PDF, number one is your aging guideline. Number two is the brochure. And we have brochures in English and Spanish. The addendum for COVID, everyone needs to have a COVID addendum. These are the materials that you need. The secondary, when the customer receives their policy, we will include pre-arrangement instructions in English or Spanish. You can look at all the other materials. I'm going to leave that up to you guys. But I'm going to move to the next product, which is the Home Protector. Home Protector, same thing. We got the agent guideline. We got the brochure guideline. We got the brochure, American Amicable Company, how long we've been in business, what's our rating. You have a lot about that. So I'm going to let you pick those. It tells you what the chronic illness brochure, what's a chronic illness, what's confined care, what is, let me see if we have the critical illness, the accident and total disability. So all these are benefits. In the insurance agents call this riders, but they are benefits to the customer. So those are the materials that you need to download. Products at a glance. Products at a glance basically is all the products that we have. Okay, so products at a glance, we're going to be talking about Golden Solutions, which is final expense, Family Solutions, which is the exact same product, same application, same quoting. The only difference is that one is 50 to 85 years old, and the other one is 0 to 49. The other product that we're going to be offering for mortgage protection is the home protector. Home protector. Okay, so let's talk about home protector first, and I'm going to send you this products at a glance, but it makes it so simple. This one, you're going to download the brochure and see it, but this makes it so simple to understand because the home protector, it's a term insurance product. Home protector, it's a home insurance product that it's a 15, 20, 25, and 30-year term. If you have 20, 25, or 30 years, you can add return of premium, but you get issue ages, right? The 15-year product, it's available to people from 20 to 65. 20-year product is available for people 20 to 60. 25-year product, 20 to 55, and 30-year home protector is 20 to 50. The minimum face amount is 25,000. The maximum face amount, it moved to 300,000 now, is not 250, it's 300,000. The underwriting simplified issue, which means there's no exam, no blood or urine, okay? And the benefits to the customer is we can add critical illness, disability, unemployment, that's the waiver premium. We can add children insurance to it. We can add accidental death. We can add a spouse who it comes with terminal illness, confined care, and now chronic illness. Very simple breakdown. And all you got to know about this product is right here. That's it. There's no other questions that anybody can ask you that is not here, except, like I said, we have chronic illness, and this one's got critical illness, but we have chronic illness. And the difference between critical and chronic, if you think about chronic, chronic is only going to be if you cannot take a shower, dress up, or eat by yourself, that you need help taking a shower, dressing up, or eating, that's going to be chronic. And our product includes that chronic benefit at no cost. Critical illness covers specific illnesses: heart attack, blindness, cancer, HIV. The other one is going to be the golden solutions, because people that are older might only qualify for, if they're older and sicker, they're only going to qualify for a specific product, and it would be something like golden solutions. In the golden solutions, we can insure somebody from the age of 50 to 85. Minimum face, 2,500. Underwriting, simplified issue, no exam. No telephone interview required. No telephone interview is required anymore. You can add accident, death to the policy. You can add children or grandchildren insurance. It will have terminal illness, confined care, and now they'll have a nursing rider with it. And this comes in 3 different levels: immediate, graded, or return of premium. Basically means that immediate, graded, or return of premium, it's healthy person, not so healthy, sick person. Healthy, not so healthy, still get them approved. So far, we looked at the different types of leads. We call them the mortgage protection leads, and we have the different products that we can have. One of them, the initial product, it's called the home protector. The company, it's the American Amicable Company, but we're using Occidental Life, but we use the American Amicable name because people recognize American Amicable, right? So this is let's do one illustration. Let's say we have this product for this person, January 7, 1980. That's the date of birth. Remember, with life insurance, whenever you ask a question, we always need to know the basics. And the basics are date of birth, not the age. I like to know the date of birth. Texas or the state, and do they smoke or not? Those are the three basics that we have here. Okay, so usually, let's look at a 30-year monthly. They're going to pay monthly. Most everybody pays monthly. And let's look at 100,000, 150,000, and 200,000. Okay, so we can pick three options. I'm not going to go into what benefits we can offer or put in because I just want to do a simple quote. So we're going to click continue. I'm going to save this quote to my generic folder. We're going to save it here, and then I'm going to open it up. And then I'm going to go, okay, so the 30-year for a person male that's 41 years of age is $52 for $100,000. Well, that's kind of okay, but let's look at the bottom. At the bottom, it says, well, the key features, we include terminal illness, like I said it would. It includes confined care, like I said it would at no cost. And then I go, which provides, the confined care provides that the insurer, if the insurer is confined to a nursing home at least 30 days after the policy's issue, you can receive a monthly benefit of 2.5% of the face amount up to $5,000. And then we have chronic illness. You know, we can accelerate up to 95%. If the person gets chronically ill, then we can advance up to $150,000, 95% of the policy. Okay, what does that mean? That if we have $100,000 coverage and it pays 2.5% per month, it's 2,500 if the customer is confined to a nursing home for at least 30 days. Then the policy would pay 2.5% for 40 months up to $5,000 per month. And that's pretty good. And then the chronic illness, that's pretty good. And then the terminal illness, that's pretty good. That's included in this price already. We didn't add anything. So that's pretty good. But I'm going to show you a couple of things. 150,000, 74, same benefits. 200,000, $97, same benefits, as you can see. But one of the things that you want to take note and look at is the term insurance policy age to age 95. Because this one is guaranteed to age 95. Okay? So you have the same guarantee of converting this policy to a permanent policy up until the age of 95. So this is 30 years. So that means that if I move to 15 year and I run this quote and I go, okay, so now I'm going to run 15 years. You see the term insurance to age 95, still the same. And the terminal illness, still the same. And the confined care, still the same. And the chronic illness, still the same. Everything's still the same, except the price is now 31. And that's an awesome price. Let me go to the 100,000 for 31 to 52. This is an awesome price, $31 versus 52. But if you say, well, 31, it's an awesome price for the customer, but on my bonus, I need to have 150,000 in sales for the year to get a big bonus. So how do I make that bigger, this amount bigger? Well, here you go. You can add a little bit of chronic illness, maybe add unemployment, and maybe add $1,000 of disability for accident. Because you have a total disability, if they're unhealthy or accident, they can still get paid disability, but most of the time, accident is going to be most common, right, at work, that they get disabled by accident. And you run the quote, and now we're going to go. And now you see that it's 52.54 because we added additional benefits. But here's the difference. This is the 30-year. 30-year, 100,000, 5210. Perfect. Or 15-year, 3133 for 100,000. Perfect. Term insurance policy to age 95. The guarantee is still the same. Plan is a term to age 95. I'm going to go here. Plan is a term to age 95. Nothing changed. So now we're giving them a 15-year, but we added some benefits. Let's look at the benefits that we added. 15-year, 100,000, 5254, 5254. But now what do we include? Well, the plan is still to age 95, still has terminal illness, still has confined care, still has chronic illness. But now we added unemployment. We added critical illness, which would cover up to $25,000 on each of heart attack, stroke, cancer, kidney, transplant, terminal illness, paralysis, blindness, HIV, coronary artery. Now we only have a disability that would pay them an additional $1,000 a month. So it's better to explain to the customer. Would you rather explain to the customer, I'm going to give you 100,000 for 5210. That includes terminal illness, confined care, and chronic illness? Or would you rather say, I'm going to give you 100,000 for 5254, but we can include, not only will we include the terminal illness, the confined care, and the chronic illness, but we're going to cover you for 10 different critical illnesses, which include heart attack, stroke, cancer, kidney failure, organ transplant, terminal illness, paralysis, blindness, HIV infection, coronary artery bypass. And we're going to add a disability for $1,000, accident only. And that is a much stronger product than any of the last two for the same price. And this is why I love to set up on 15 years versus 30 years, because you can offer more benefits to the customer if you can make them understand, hey, this is what I can do for 30 years. But let me tell you what we can do for 15 years. All the benefits are the same. Everything's the same, except you're getting more and you'll be getting more. And how does that, what did they ask? Well, what happens at 15 years? Because it will expire in 15 years. Well, yes, but in 15 years, we're going to do a policy change form, which is very simple, the one I just downloaded right now. And we're going to change that to a permanent policy to age 95. Done.
You've been listening to the Ensurity Group with Mo Flores.
That's simple.
Learn, grow, have fun, make money. Listen again soon for another podcast. But in the meantime, we're always an email away. 24/7, 365 at operations@insuritygroup.com. Find us on the website at insuritygroup.com and reach out on Facebook, Instagram, Twitter, LinkedIn, and YouTube. And don't forget, you can support us by donating at anchor.fm/insuritygroup/support. Thanks for listening, and we'll see you next time.